Ladies and gentlemen, boys and girls, and children of all ages, you're now tuned into the Investor Show as always. This is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we're going to jump straight into it. Hit the subscribe button, hit the bell icon, hit that like, comment, and share button. All right, y'all give me 1 second here. So we got that that's going in the background. Okay. All right. So, ladies and gentlemen, boys and girls, and children of all ages, I wanted to say welcome to the show. Today, we're going to be talking about the stock market jumped 400 points today, and we've seen tech stocks leading the way. So, as you're catching this live, come in and say hello, all of the great stuff like that. But most importantly, ladies and gentlemen, I wanted to push this show to let you guys and girls know that what we spoke about the other day when the market was crashing 4 days in a row. As the market was crashing 4 days in a row, so many people got nervous. So many people got scared. So many people asked the question, Prince, why is it crashing? Is this going to happen? Why is this happening? All the other things like that. Now, in today's episode, what we're going to talk about the bull market, the down market that we saw, and the bear market. How does the bull and the bear market work? Right? And which side should I be on? What side are you on? And why does that make sense? Then we're going to talk about the rebound stock versus the high return stock. Because so many people are like, hey, do I want to catch a stock when the stock market is going down? Do I want to look at the stock that has a chance of rebounding? Or do I want to catch the stock that I feel as though, hey, this could be the next big thing? So many people get wrapped up in, should I get on a big company that's already doing well? Or should I do a stock that can return real fast? The fourth thing I'm going to go over, the third thing I'm going to go over, sorry about that, ladies and gentlemen, we're going to go over the market cycles. Of course, if you watch the show, you should know these market cycles by hand, but I'm going to go through these. So when you see these cycles come, you know how to react. This took me a long, long time, and it still bothers me today. Ladies and gentlemen, I know when the stock market is going up, you feel like a genius, and you feel like if you already invested, you feel like a genius. If you haven't invested, you feel like you're missing out. So sometimes you may jump in at a peak. When the market starts to retract, if you already invested, you feel like an idiot. If you are getting ready to invest, you think it's going to go further. So, ladies and gentlemen, we're going to talk about that rebound stock, and we're going to talk about the high return stock and the market cycles. Also, we're going to talk about what's going on with gold. I've been watching gold all year. Gold had a nice run, but my issue with gold, why are you tracking the stock market? When the stock market goes down, gold goes down. When the stock market goes up, gold goes up. If you know anything about investing, or if you're new to investing, gold and the stock market, commodities in general, gold, silver, things like that, they're supposed to work in inverse with each other. Inverse meaning that stocks go up, gold is supposed to go down. And while the stock market is going down, gold goes up. I had gold in my portfolio to hedge the market. But when the market was going down, so was my gold. When the gold was going up, so was my gold. And it made me consider, why am I holding in the gold? And I made that video, why I sold all my gold. And I sold my gold and I went to long-term bond ETF, something that can generate me a cash flow and wasn't as sensitive to market moves. That's one of the things that kind of confused me. But as y'all coming in, say hello, tell me where you're from. And here we go. Michael says, nice shirt. Thanks, Mike. Thank you. I think this is my first time wearing the shirt today. I just took some photos earlier today. And yeah. So yeah, thank you. Nice shirt, thank you. Appreciate it. I think it don't matter what the brand is, who cares? And then Michael's out there in Toronto. He says, hi everyone. How you doing? How you doing? How it's going? Woke one. Got some share of work near the bottom before the bounce. Work. I don't know if I remember work. Is that we work? Big Al is in the house. What's going on, Big Al? He's the Prince of Stocks. What's going on, Al? And then we got Dragon Manifest. He says, let's go. What's going on, Dragon Manifest? And we got Wesley Buckin. But I don't know if I met Wesley before. How you doing? He's saying good evening to all. How you doing? And then we have Miss, I can't never say her name, Miss Benjamin. Miss Crawford Benjamin is in the house from North Carolina, Concord, North Carolina, over there on Facebook. Thank you for tuning in. And Wesley's here. He's from South Carolina. Okay, North Carolina, South Carolina is in the building today. And we got Mr. Eric Davis. He says, "What's up from Jacksonville, Florida? Jacksonville, South Carolina, North Carolina." And we got Mike. He's coming out of Toronto, Canada, Mr. Lemonade. He's up there sipping on his lemonade stock. So that's fine. Ladies and gentlemen, I wanted to first thing I want to get into, ladies and gentlemen, I had a conversation the other day, and this is the bull versus the bear. A guy said, Prince, we was talking on the phone yesterday. The market has dropped four days in a row. I mean, tech was just getting beat up. NASDAQ was just getting beat up along with the S&P 500 and Dow Jones. And he said, Prince, I'm thinking about jumping on some inverse ETFs. I'm thinking about going against the market. And I said, I made this bet. I said, well, look at this. If you have a person that bet with the market and you have a person that bet against the market, betting the market is going down is a bear market. Betting the market is going to go up is a bull market. I said, if you put both of those people 9 times out of 10, yes, the bear may win some here, there, but in the long run, something that I learned in the long run is why I don't short stocks. I rarely buy puts on stocks, right? But what I do is I always go long. Long is considered the bull side, going up. I'm considering the stock is going up. Going short is going down, the bear market. Short, down, bear, down, bull, up, long, up. So you hear somebody use the terminology, I'm going long, I'm going short. Or it's a bull market, it's a bear market. You guys kind of know where I'm going. To my more seasoned investors, of course, you know what you're talking about, but I want to make sure I don't leave anybody behind. Also, we got, hold on, Mr. Dragon says he's from Eaton, Fayetteville, North Carolina. Okay, Roper, Fayetteville, and Roper, North Carolina. Okay, out there, J. Cole. I see you, Dragon. All right. He said, "Can you do a video on how to buy on the forex forex with TD Ameritrade?" Do they got forex over there on TD Ameritrade? I'm not sure. They might have that on there. Thinkorswim, but we'll see. But ladies and gentlemen, that bull and bear market, I told him, I said, hey, you know what? If you have somebody that bet on the market going up and you have somebody next to you betting on the market that goes down, 9 times out of 10, the person who's betting on the market going down, y'all can't even see, I got a tie on today. It ain't the best tie. I mean, it ain't the best knot, but got a nice little tie on today. But anyway, ladies and gentlemen, if you have 2 people betting on the stocks going down and the person that's betting on the stocks is going up, usually the person that bets on long and bullish terms will win, right? Long bullish term people will win over time, ladies and gentlemen. So if I had to pick a side to be on, I'm going to pick the side of the bull. Can you make some money from the bear? Yes. But this is the thing about the bear. What's so tricky? Just like right now, yesterday, you're like, you know what, man, I think we're in a bear market. I'm just going to go ahead and bet against the market. As soon as you get in and bet against the market, what happens? The market turns right back around on you. As soon as you thought you were going to bet against the market, the market is going to turn right back around on it, right? So that's why the bear market is so risky versus you have a better chance of betting long on Amazon, long on Apple, long on tech stocks than you do of trying to bet against them. Yes, could you be right tomorrow morning? Could the stock market crash? But when you look at the possibility of the stock market crashing tomorrow morning versus running up tomorrow morning, the person who bets on the long and the bull side is the house. When you go to Vegas, you betting with the house or you betting against the house? Never bet against the house, right? Why? What classic what just Warren Buffett just taught us? One of the longest running investors that we ever seen, 80 years. He said, never bet against America. America has been through wars. America has been through depressions and recessions and busts and booms, Republican, Democrats, 9/11, the housing crisis, the Great Depression, all type of things this economy has gone through. And the thing that he says the most is never bet against America. America has this match that they will always win. And when you look at every bear that jumps into the market in the long run, look at March. I thought we was going to go even further. Guess what? We turned right back around. The people that were shorting the market, I had so many people that said, Prince, I'm going to short this. I'm going to short that. It's a couple things that I bet against a little bit with an ETF. But, most people say, hey, I'm going to short this. I'm going to jump that. I'm going to get against this. I'm going to get against that. And guess what? When you are on the bear side, even if you are right about the market, you have to have your timing down. The bear has to have direction and timing. What do you mean, Prince? If I buy a put option on the NASDAQ or if I buy inverse ETF on the NASDAQ and the market just takes off running now, and then let's say if the market takes off running, it goes up 10,000 points, then it does drop 8,000 points after it runs up 10,000 points. That means that I'm still wrong. Even though I predicted it was going to drop, my timing was off. Versus the bull or the person who's on the long side, when the investments are going down, they're just dollar cost averaging. They're doubling up on their investments. They're buying call options if you're a little bit more bullish. They're buying leverage bullish ETFs inside their portfolio. That person, chances of being right increases dramatically. When you're the person on the bear side, when you're betting against the market, not only do you got to know that the market is going to crash, you got to know when is it going to crash. Ladies and gentlemen, we know it's going to crash. We don't know when. So I can sit here and am I going to try to worry about having my timing and direction right? Or am I going to jump with the house and go with the house? So think about it. Look at the sentiment of investors. I just spoke about this on the last live episode. Look at the sentiment. Just last week, everybody was a genius. Tesla was the best thing in the world. Apple was the best thing in the world. Amazon was the best thing in the world. 4 days of a bear market, everybody, oh man, look, I told you everything's fake. Government's manipulating. I told you guys Amazon was going to fall. I told you guys XYZ was going to fall. So look at the sentiment. Don't be so flip-floppy. You're in this for the long run. If you're a day trader, different topic, right? But when you're in this for the long run, I'm not that smart to pick the bottom of the market. I'm not that smart to bet against the market and to be exactly right, knowing I have to have the time and the direction, right? You got people who are right now betting against the market, and guess what? Ladies and gentlemen, they will be right. They might be right. It may, but their chances of being right, it may happen in December. It may happen next year. I know some people who've been waiting on the market crash since 2015, ever since President Trump got elected. So, ladies and gentlemen, looking at the bull and the bear side, the bull is the house. And I got another L on bull. Y'all didn't even tell me I got an extra L on bull. Good gracious. But bull, Bull. I got to hear Bull. Goodness gracious. But I should tell you guys and girls how strong I am. Stay with the bull. The bull is the house. Unless you are super smart and you can pick bottoms and you know you got the timing right, go get rich. But if you're a regular investor, everyday person, stick with the bull. The bull will always probably be right. All right. Let me see what y'all say in the comments. The next thing I'm going to get into, we're going to talk about buying into rebound stocks versus the high return stocks. So before we get into the high rebound versus the rebound stocks versus the high return stocks, let me see what y'all say in the comments. I see y'all got some comments coming in. Somebody asked me, okay. Yes, Ms. Crawford Benjamin said the bull long up, bear short down. That is correct. When I say bull and long, that means the stock market is going up, bear market means it's going down. Another thing I want you to keep in contact, I know you asked me about REITs. I meant to tell you that I like the concept of this new company called Roofstock. They were on the show not too long ago, and what they're doing is they're allowing you to buy property with tenants already in it. So you can buy a property with a tenant already inside the property. You can, and it's not as sensitive as a REIT is. REITs, real estate investment trusts, they are very sensitive to market movement versus this new style of like, hey, I can go buy a rental property in Mississippi that already has tenants, that already has property management, right? I can already calculate what a mortgage is going to be, how much I'm going to pay. I like that side of investing into real estate versus real estate investment trusts. I do like that. She said, I didn't see the tie. Yeah, I know, right? My microphone is covering up my tie. I put a tie on today and everything, but here we go. But you're right, Miss Benjamin. Miss Crawford Benjamin, she said the house always wins. The bull is the house. Ladies and gentlemen, remember, the bull is the house. As y'all come in, hit that like button if you like the video. If you don't like this content live, hit the like button anyway. Tomas says, would you buy oil and gas industry stocks for short-term gain since oil fell a lot during the last 30 days? No. If you really follow me, I don't do oil, man. I like energy. I don't understand energy all the way. I do like oil and energy, but I don't like oil. Why don't I like oil, ladies and gentlemen? I don't like oil due to the fact of why don't I like oil? I don't like oil due to the fact of it's too much going on. First of all, oil was at its peak in 2008, back when the gas prices went through the roof. But what has happened since with oil is very politicized, political interest, I would say, political risk that I'm taking. One, because you have the OPEC that's overseas, where the largest oil producers have got together and created the OPEC. I can't think of the acronym, what it means. And they control the oil prices. How do they control the oil prices? They control the supply and demand of oil. The more oil they pump, that increases the supply. If demand stays the same and supply increases, prices go down. If they pump less oil and demand is the same, prices go up. If the demand and the supply meet each other, that's the equilibrium. So they always get together, because what the problem is, Iran will pump too much oil and then drive the prices down. Iraq will pump too much oil and drive the prices down. And this person don't pump enough oil, then it drives the prices up. Iran gets mad at Iraq and pump a bunch of oil. That was just too. I was just like, I wake up in the morning and gas prices just changing depending on. It's too mixed. It's just too much political stuff already going on. So it was too sensitive to foreign governments in the Middle East, and everybody know there's no peace in the Middle East. And anytime they can just wake up and one of the members of the OPEC can get pissed off, and I don't want their volatility. I just say, and I think that when I look at oil, the simple way I look at oil, and I have a friend that was in oil for a long time. The way I look at oil is nobody is creating products that's using oil. Everybody's trying to use less and less and less and less oil, right? So nobody's trying to create that much oil. So when I look at the future of oil, like look at us, look at the electronic cars. You got Tesla, then you got NIO, then you got XPIT. You got so many electrical car companies. Then you got GMC get into the electrical car space. So when the dependency for oil I see into the future is decreasing. Plus, we started fracking. Fracking is when we can go out into the middle of the ocean and just pump oil. When we got into fracking, America became the number one producer of oil. We just go out in the middle of the ocean and just pump oil right out of the middle of the ocean. So when I see the demand of oil, seem like it's going to drop. I mean, there will always be a demand for oil. The demand for oil will always. It seems like it's kind of plateauing or dying down. And then I see the future of oil. The future demand of oil, I don't see it growing. Then I can see the supply of oil continues to grow. Before, we just go to the desert somewhere, pick out the oil. Now we have technology that allows us to go frack, go into the middle of the ocean, find oil pockets all over the ocean. So now we don't have to be dependent upon the Middle East. We can go out into the middle of the ocean, drill a hole, boom, we got oil. So when I see the supply is increasing because technology is teaching us more and more about what oil is, they can use a satellite to tell what oil is. Then I look at the future demand of oil. It seems like it's plateauing and decreasing. And then with the political risk, no go for me. Renewable energy, yes. Oil, I'm not a big fan of that. Tree said, real talk. Thanks, man. Appreciate it. LK Raw. I'm not sure if we hit the bottom or not, but just start buying calls again. Purchase 6 months out to be relatively safe. Yes, I'm looking at next summer. If you're buying calls next summer, they're more expensive, but very smart move there. JW, how you doing, LK Raw? Always the end. LK Raw, do you believe in long-term options over short-term options? Of course. Long-term, you don't make as much. You won't make as much money. And long-term is you don't make as much money, and they're more expensive. So if you get an Apple call for next year, it's more expensive than you get an Apple call that's going to expire this Friday. Short term, you have to be your timing has to even be right. You can have the right direction, but if it's at the wrong time in the short term, it means nothing. Let me see my last call I lost on. I think it was Facebook, right? I lost on my Facebook call. I had it. The direction was right, but I was off about 2 or 3 days, which ended up making it a losing trade. So I had the right direction. It hit the mark that I thought it was going to hit, but just the timing was off 2 or 3 days. So with a short term, the timing has to be you don't get as much time. Versus if I have calls on the NASDAQ and they don't expire until December, I have more time to be correct. All right. Designer Soapbox said, nice. Can you spell out Wreath? Rooster? REIT is Real Estate Investment Trust. Real estate, RE, real estate. The I is investment. The T is trust. REITs. Or some people say REITs. REITs. All right. She said, "Thank you. I'll look into it." Yes, and Miss Crawford Benjamin out of North Carolina. Yes, he has been on the show, and you can see his interview here on the show when he talked about roof stock. So I like that. She's political risk. Yes, designer soapbox said that is true. He said, "I agree. Oil has its day as people are moving towards more efficient and cleaner energy. Sometimes not both. Either way, still better than oil." Yes. So people moving to renewable energy. So the next topic, ladies and gentlemen, everybody always try to say, "Hey, Prince, market is crashing. I'm looking for opportunities." I'm a big guy of the rebound stock. What I mean by the rebound stock, you take Amazon. The last 7 days or last 4 days, Amazon dropped 7%. That's a rebound, just a little pullback. It's like a rubber band. I wish I had one on me. You know, you pull a rubber band like a slingshot. You pull the rubber band down. The farther it goes down, when you let it go, it just it shoots up the most. Look at the industry that got hit the most. The Nasdaq tech stocks got hit the most. The stock that has been the sector that has been carrying the market all year got hit the worst. That's a key sign to buy now. The rebound. Think about it. Amazon was already a great company. Facebook is already a great company. It's making money with zero to little debt. You have things like Coca-Cola. You have things like, look at the tech industry, Microsoft, Big Apple, these big companies that are financially strong companies that just had a little pullback. That's the time where you could jump in with maybe a call option, or you can jump in, double down on your position. You don't have to buy too many other positions. But if you already have Amazon in your portfolio, buy another one. If you already have Facebook in your portfolio, buy another one. If you already had Apple, buy another one, right? So look into your portfolio and see what you're already holding, and then look to see if you can buy a little bit more while the market is correcting, right? So now the high return. Some people say, well, Amazon is $3,000, Facebook is 200 and something dollars, Microsoft is 200 and something dollars. These companies are too expensive, so they like to fall into things like, Prince, what about that XPEV? Prince, what about these little companies that caught a lot of momentum? NIO, small, unprofitable overseas company, a little company, but it caught a lot of steam, right? It caught a lot of momentum. Prince, what do you think about jumping into that? That's a good one. I can really make money. You're right. You really can make some money. But here is the classic way of investing. One mistake that I made in investing, maybe you can't do this, but hey, you might want to listen to me and it might be something good for you. When you fill your portfolio with high return stocks, you're setting your portfolio up to be a loser. Majority of those high return stocks are not going to pan out. Some of them are going to catch momentums, run for a while, then they're going to lose. People are going to wake up one day and say, hold on, look at the finances of this company. It's horrible. And the stock goes to crash. So usually the potential high return stock are the unprofitable, unproven stock, but they have a high chance of getting it right. I've taken that risk on Uber. Why haven't I taken why I took that risk on Uber? Uber is number one in its space. It's the biggest and the baddest and it's most aggressive in its space, in its sector, in the rideshare food delivery sector. What they call it, gigs or something like that. Versus NIO, XPEV, everybody know in the electronic space, electronic car space, Tesla's at the top. So none of these companies at the top. Everybody's looking for the next Tesla. Everybody's looking for the next Facebook. Everybody's looking for the next Google. A rebound stock, Facebook. A high return stock could be TikTok. TikTok is not publicly traded right now, but let's say TikTok. So when the market is taking downturn, do I jump into TikTok because it's so cheap? Or do I jump into Facebook because it was a great company but just pulled back by 7 to 8%? Do I jump into Apple, a good, solid, proven tech company, the biggest one in the world, is pulled back 7%? My return is not going to be awesome. Or do I try to jump on the potential next TikTok? Right? With me, I always would tell people, bet on the side of the house. The risk of you being correct on the high return stock is way lower than the rebound stock. When you see the market crashing, the rebound stocks are the safer bet, even though Fortune favors the bold. I always know that. Every now and then you could jump a little bit, no more than 10%. You could jump a little bit and say, well, let me see if this one make it. That's what I did with Uber. Let me see if this one can figure it out 2, 3, 4, 5 years down the line. Let's see if they can figure it out. I'll try it. But I wasn't a fool. Most of the stuff in my portfolio, I understand what it is. All right. So the next thing we're going to get into market cycles. Ladies and gentlemen, market cycles are very important. Ladies and gentlemen, you guys got to understand the market cycles. So many people hit me up and they say stocks are crashing. Why are they crashing? Why are they going up? These are cycles, ladies and gentlemen. It's just like a woman. A woman who has a cycle, we all know what that is. We understand it. We know what's going on. Just like when your gas tank hits E, you understand, hey, sometimes as you wear onto a car, it needs new tires. You got to get an oil change. You got to get this change. So those are the things you need to pay attention to, understand the market cycles. But before we get into that, let me see what you guys and girls are saying in the comments. Okay. Designer Soapbox said, no, the one REIT you were sharing. Oh, the opposite of the REIT that I was sharing was Roof Stock. I'm sorry, Roof. ROOF, like a roof on a house. ROOF Stock. STOCK. Their CEO, Mr. Gary Beasley, he stopped by the show. They've been everywhere. They've been on all the major news outlets, but they reached out to me to come onto the podcast, and he really broke down that whole roof stock thing. Thought it was pretty cool. Roof stock. I'm gonna put in the what you call it? ROOF STOCK. There it is. I put it in the comments. Roof stock. ROOF STOCK. A lot of people are talking about Rocket. They say that it's going to the moon. What do you think about that stock? Come back to that one if we get a little time. I've heard a lot about that one too. I have some friends that jumped into it and they have it, but we'll look into Rocket just a little bit. Designer Soapbox says yes, buy the dips. Another way you can buy the dips, put your DRIP, dividend reinvestment plan. Use that as well, dividend reinvestment plan. Alan Williams, what's going on, Big Al? He says, what about Disney? Disney is another one. Disney is a company, it's a top 5 brands in the world. Disney will be fine. They got the NBA down there playing their games. Yes, they're going through a hard time. They're going to make it. They're going to make it through to the other side. I can see Disney making it through to the other side. Who wouldn't loan or invest into Disney for them to make it through the pandemic? Disney will make it. So I definitely, it's not going to be a sexy stock and take off like Tesla, but over time it'll slowly trickle up. Yes, buying the dips is what you have in your portfolio. That is key. I agree. Yes, sometimes the best stock you can buy is the stock you already own. Look at the stock you already own in your portfolio. When dips come, major dips come, you're like, okay, market is going crazy. Let me buy a little bit more. Let me double down on what I already have. Dollar cost average, right? Also, you could get a little bit more riskier. You want to get a little bit more riskier? You can buy call options on stocks you already have. Also, but that's very risky when you have a lot of volatility in the market, right? Another thing you can do, you can look at buying the index. The index is down. NASDAQ went down like 7 to 8%. You don't have to be a genius and find a stock. You can just buy the index that just dropped 6 to 7%. All right. She said, better get their rebound stock. Exactly right. The one who can make it back, you're looking at the one, hey, this was a big solid company going through a hard time, or do I want to kind of try the guy who's on the rebound? That's my guy there, Randy Johnson. Y'all, everybody say hey to Randy. Randy is the one who runs my Instagram. So all those cool flyers y'all see, that's due to Randy. So y'all give a shout out to Randy. He's saying 24 minutes is a cool knowledge. Thank you. He the one that makes the video clips for my Instagram and stuff that's on my Instagram stories and the clips that I make that y'all see coming on the channel. Alan said, I'm sticking with Nike. I got them when they were low with the Kaepernick kneeling. A lot of folks pulled away and I jumped on right away. Very smart. So you remember, and people thought I was crazy when I said, I think that was like last year, whenever that was, when Kaepernick kneeled and Nike dropped 4%. Everybody wanted to ask me what was going on with Nike. Do I think it's a good time to get Nike? And I said, hey, look, guys, we live in a very wishy-washy society. They'll forget about this in 2 weeks. Now, no, people don't forget that even happened. Think about it. When Nike dropped 4 or 5%, nothing financially had happened to the company. The brand was still strong. The brand was still noticed. It was just a PR move that people didn't like. Like, for prime example, McDonald's CEO got fired for sexual harassment. The stock dropped 3%. I went and brought it. CEO got replaced. People don't forget the CEO was even sexual harassment. People have forgotten the whole Nike stock dropped because of the whole Kaepernick thing. So those are another ways you can see how you can find gems. When you see people overreact to a PR move, when I look at a PR move, I look at it and say, okay, how can this PR move affect financially? If it has nothing to do with financial and the stock is dropping, that's a signal to buy. Any investment. It was just like if you were in the market for a house and the house is worth $100,000 and people said, oh yeah, you know, the grass is hard to grow over there. So everybody just, the price of the house just start dropping. You were like, what? The price of the house is dropping because the grass is not green? Okay. Now it's down to 80,000. That's even a better opportunity for you. I see we got like 30 something people in here watching live. Hit that thumbs up button. Hit the thumbs up button if you are coming in and you're catching it live. All right, those are my thing. You're right there. Thank you for backing me up all the time, Miss Crawford Benjamin. She said roof stock. Appreciate it. She said, okay, thank you. I'll check into it. Yes, I do like their concept. I do like their concept. DR Briggs said, why buy non-dividend stocks versus dividend versus mutual funds? Okay. Why buy non-dividend stocks, non-dividend paying stocks? So usually stocks that pay high dividends don't grow as fast. So if I'm investing and thank you, Mr. Briggs, for tuning in. If I'm investing for the long term, for 10 years down the line, a portfolio I manage for a little kid, right? He needs this money in 15 years. Yes, I can get him a big dividend paying stock like AT&T. But if you go back and look at AT&T, yes, it paid a nice dividend. But guess what? Look at the growth. They don't grow that much. Versus Amazon doesn't pay zero dividends. Apple didn't pay dividends for a long time. Google doesn't pay a dividend. But look at the growth of Google and look at the growth of Amazon, non-dividend paying stocks, which are growth stock, tech, non-dividend paying stocks versus dividend paying stocks like Coca-Cola. Dividend aristocrats. Aristocrats are companies that have paid dividends for 25 years consistently. Not only paid dividends for 25 years consistently, but has consistently raised them. All right. So when you look at that, Google doesn't pay a dividend. But guess what? If you buy Coca-Cola, it'll pay a dividend. But if you stretch Coca-Cola and Google out over 10 years, I can bet my bottom dollar 9 times out of 10, Google will outperform it. Right. So don't get so that's why I can see that's the non-dividend paying stock, right? A mutual funds is very few. I don't deal with mutual funds. I don't really like mutual funds. The reason why, majority of mutual funds do not. I would prefer ETF, a low cost ETF that tracks the indexes, one of the major indexes, S&P 500, maybe the Nasdaq. I would prefer them. Majority of mutual funds don't beat the S&P 500. They don't beat the major index over time. Some may beat it for a month, some may beat it for a year, but over 5-10 years, majority of mutual funds do not beat the S&P 500. So with that being said, if it's not beating the S&P 500, why waste my time investing into it? I'd rather just get an index. So I'm always big on a low-cost index fund like SWPPX, that's Sierra Whiskey Papa X-Ray. That's a not Goldman Sachs, but a Charles Schwab S&P 500 index. Only costs about $50, I think, right now. $40-$50, pays a nice little dividend. You can have it automatically invest, and that's the S&P 500 is tracking the top 500 companies in America, and most companies can't defeat that. So most mutual funds don't. Technical with a headlamp with the strap. He said, brought another Alphabet Class A. Smart man. Eric Davis said, my DraftKings call options are looking great right now. Nice. I got to look into DraftKings. A lot of people have been talking about DraftKings a lot. And I do like that concept of letting people. I'm not a big gambler, but I know a lot of people love to bet on games. People have been betting on games forever. And people have always been, I'm in the barbershop. People are like, man, I bet you, right now you got uh, the Lakers and the Rockets, and you got the Nuggets and the Clippers out in the West. Shouts out to Denver, the Denver Nuggets. They're out there. You got them going on. Everybody's betting with it against them, right? So people like doing that. So that's nice. Congratulations. And he said, Ako said, "What's up, Prince? Late as usual, but I'm here." Hey, at least you made it, my man Turner. What's going on, Turner? Glad to see you here. Max B, that's my guy, Max B. Max B, man, let me give a shout out to Max B. Max B's out there in Washington. I've seen Max B come a long way. Max B will DM me, and I've seen his technical analysis and fundamental knowledge growing expeditiously. Right? It's growing fast, and I'm just happy, and I'm just to see the way he talks. So Max B, shout out to you for learning the finances, learning about companies, not only just learning what a stock is and how does it trade, but you're learning the finances and how they run. When you speak to me, you're talking about what you read on how it's going to affect the liabilities and the assets and their cash flow. I love it. I love it, man. Thank you. Keep it up. Keep it up. Sunday morning, very true. How you doing there Sunday morning? He said, great points. Thank you. No problem. Anytime, Mr. Briggs. Tactical with a headline with the stretch. He said, yeah, I sold my Johnson Johnsons to get it. That's a nice move. You left Johnson Johnson. Let me guess, you got them for the vaccination, and the vaccination wasn't working out, so you went with Google. That would be my guess. Freddie B, I jumped in on NIO, $350, jumped to $20. Nice, nice. I'm gonna probably do a show on NIO versus XPEV. Y'all stay tuned for that. That might come out tomorrow, some later on this week. We're gonna look into that. Alan said, I got them DraftKings legit. Nice, nice. Tucker the headline says, thank you. Okay, now I got it. Proud Dad. Okay, what's going on, Mr. Turner? Proud Dad. Out in Atlanta, I think he's in. I think you're in. Okay. So, ladies and gentlemen, now let's get into the market cycles. A lot of people don't understand the market cycles. Ladies and gentlemen, there are 4 market cycles. You're going to hear me beat this into your head over and over and over and over as an investor to be the sounding board. Ladies and gentlemen, you're always going to have a trough, the down. In March, you saw a trough, right? Market was down. Then you're going to see an expansion. The last 10 years, we've had an expansion on the stock market. You've seen unemployment. You've seen unemployment drop. You've seen, jobs are being created. Unemployment is dropping. You see new companies being expanded. You've seen companies making earnings on top of earnings. So you saw an expansion. So was it a trough in 2008? Then in 2009, we went into an expansion. We peaked out in March of 2020. Then you saw a retraction. We retracted that lasted for maybe about a month, maybe about a week or two, and it fell hard. Stocks always fall hard. They take the stairs up, but they take the elevator down. You saw in a retraction back down into a trough that you saw back in 2008. Was after the trough? Expansion. What's after the expansion? A peak. What's after the peak? A retraction. What's after the retraction? A trough. Was after the trough? An expansion. Was that you guys get it? Now you guys can see this. But all of this moving that you're seeing, you're slowly seeing stocks get higher and higher. Once you zoom out, when you're watching something every day, it's hard to see where something is going. If you're a day traders are worried about what's happening in a day or two. But if you're an investor, it's hard to see. You got to zoom out and you'll see the chart is slowly doing this. For the last 100 years, stocks have gone and had Great Depression. They've had wars. They had Republicans. They had Democrats. They've had companies go bankrupt, companies blow up, the dot-com bomb, the financial crisis. You had the Black Swan of 87, you Black Monday, all of the crashes. I read and studied all of these crashes, credit crashes, all these gold standard. We got off the gold standard with Reagan way before I was born. Not Reagan, but Nixon, I think that was. Nixon way before I was born. And guess what? Over time, when you step away and you zoom away, you're going to see the markets going up. So, ladies and gentlemen, understand trough, expansion, peak, retraction, trough, expansion, peak, retraction, trough. That's what you're going to see market cycles. Prince, why are you bringing this up? Prince, why stocks are crashing? What's going on? What's happening? Oh my God, oh my God. And the media jumps into it. I'm not going to lie. When the market crashes, my podcast does extremely well. When the market crashes, I'm like, whoa, this is my first market crash in March. Since I didn't start podcasting in YouTube until 2013. And since 2013 until now, we've been in a bull market. As soon as that bear came, my numbers just went through the roof. Everybody saw that market crash and they wanted to know. When the market was doing well, nobody cared. Everybody's, why is it happening? Understand the market cycles. Ladies and gentlemen, this hurt me as an investor. 2008, I thought the world was coming to an end. I didn't know what a recession was. People was talking, oh, guys, and when that recession, when the stocks are going down, oh, the media is going to go bad. Oh, this is the worst, the fastest crash we ever seen. We're looking for a bailout. The world's coming to an end. Iraq is going to overtake us. China got all our debt. We're in some major trouble. Da 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 da. That's what I always saw when I saw those market crashes, right? And I was like, oh my God, oh my God. Nobody told me, say, hey, Prince, listen, we're going to go into a trough. We're going to bottom out. And then we're going to go into an expansion. Nobody tapped me on the shoulder and told me that. But I'm tapping you on the shoulder and letting you guys and girls know. Guys and girls know that. Very important to know. Next time we're going to get into what's going on with gold. Gold. But before we get into gold, I'm going to look into what everybody's saying. Oh, he said, okay, so she's talking about NIO. Everybody jumped in the NIO. Hey, how you doing, Miss Ruby? That's St. Louis or Memphis was Ruby's checking in from. There you go, right there. You got the trough. When you're down in the trough, that means unemployment is high, GDP is low, gross domestic product is low, unemployment is high, right? Stocks are falling or stocks are flat. That's the trough. When you go into an expansion, you're seeing unemployment start to lower. You start to see corporate earnings start to increase. You start to see more companies, the company GDP starts to increase. Then you hit a peak. After that peak, once you start to peak, you're going to have a retraction. 2 months of a decline, 2 quarters of a decline in GDP is a recession. Now you're going down. After that retraction, you're going back into a trough. Understand that, ladies and gentlemen. Make sure you put that up on your wall. Write that down. So when you see this is something that hurt me a lot as an investor where I was trying to make sense of something, didn't know we was going through a cycle. It would just be just like a woman. When you're a woman, you have a cycle. When you're a little girl, and you have your cycle, you're like, what's going on? If nobody told you, you're like, what's going on? Oh my God, I'm dying, I'm bleeding, right? But if you have an older seasoned woman, she tells you, listen, honey, that's a cycle. Welcome to womanhood, right? Welcome to womanhood. This is a cycle. While everybody's running around and you're freaking out, that's what I was doing. I saw that. I didn't understand. I didn't notice the cycle. So you guys and girls pay attention to that. Freddie B, what's going on? He said, then I sold 165 shares of NEO and jumped into Apple and Tesla. You know what? He got away from the high risk return and jumped into the rebound. You see, he did it the opposite way. He went from the high risk stocks, the high return stocks, and he jumped into the rebound stocks. Smart. Nice play. Nice. She said, the media is beyond me. Yesterday, they told everybody they wanted to sell off. Exactly, right. The media makes a lot of money. Shout out to a lot of people. I know a lot of people in financial media and Yahoo Finance. And I don't say I know them, but I met a lot of them and dealt with a lot of them from Yahoo Finance to CNBC to Fox. Shout out to Mr. Charles Payne, who wrote me a personal letter. Thanks for him for checking out. Then also shouts out to Mr. Andy Sori over there at Yahoo Finance and Miss Becky Quick at CNBC. So a lot of those have been on the show. A lot of them have tuned into the show, but they make their money from fear. When everybody's, oh my God, what should I buy? What should I sell? People tune in. When they see stocks going up, they feel like they missed the boat. They think it's too high. But when stocks are crashing, they're trying to make sense of it. People love fear. When you put a death counter, oh, how many people have died from the coronavirus and it's going up every single day? That's what get people to tune in. Fear. fear. When fear hits the market, when everybody gets to sell off, that's what controls people. Fear. People love fear. We give our fear more attention than our confidence. Raise your hand if you're guilty. I'm guilty. I knew it. Memphis, Tennessee. How you doing, Miss Ruby from Memphis, Tennessee? All right. Digital soapbox. That's economics 101. You're definitely right. Economics, right? You see how economics comebacks. Thanks. Shouts out to Mr. Crow, my ninth grade economics teacher. But you're seeing how supply and demand, when we spoke about oil, and then we also talking about that supply and demand and equilibrium. That's economics 101. Then we talked about the market cycles, understanding and knowing what the market cycles are. That's economics 101. I bring these back to you guys and girls because I want you guys and girls to see how it applies today, right? Going on to my next topic. What's going on with gold? What is going on with gold? Gold is something that's supposed to move inverse to equities. Equities are considered stocks and things like that. Gold is considered a commodity, a safe haven. It's supposed to be a hedge, a hedge. It goes against the market. As the market falls, gold goes up. But 2020 has been very crazy. I've seen gold hit new highs along with the stock market. And when the stock market started to fall, so did gold. That really kind of confused me. I'm like, why? And it made me get rid of gold because gold was too sensitive to the market. I went with the BLV, a long-term bond that pays a monthly dividend. I went to that one to be my inverse because I said, hey, if the market crashes, what is something that can stay solid a little bit to kind of hold its value? It used to be gold, but now you're seeing gold and silver is just running with the market and falling with the market. And I had wrote down that I said, hey, you know what? I think gold is telling us what's happening, what's really happening, and equities is telling us what the Fed is doing. I honestly believe that still. Even though the Fed is doing what they're doing with the stimulus packages and pumping up the stock market, why is gold dropping when gold goes? I don't understand that. Maybe some type of manipulation beyond my level of competency. But I always ask me that question: what's going on with gold? What's going on with gold? And what we're going to do next, we're going to take a look at RKT, this rocket stock here. We're going to look at that one after I look at you guys and girls comments before we roll over there. I like that, Miss Designer Soapbox. She said, yep, will cut their losses of fear. Yes. Fear controls you. People are like, man, you know what? Man, I was holding on to Uber. I thought it was going to be something. I see it going down. The whole market is going down. Everybody says it's going to get worse. I'm going to just go ahead and before I lose it all, let me just go ahead and cut it. You don't lose money in the market until you sell. You can lose value, but you don't lose money. Take me for example. I purchased a home. Let's say if I purchased a home for $100,000, I purchased my home for $100,000, right? And let's say if the market went down to $80,000, I don't care if I sell it today. If I brought my home for $100,000 and then the price went down to 80,000, does that mean I lost money? No, I lost a little value, maybe some equity. I don't have any equity, but I won't lose unless I decide to sell today. But if I continue to live in my house and pay my mortgage, maybe it may rebound and go to 120, 130, 140, 150, creating equity for me, right? So let's go into it, ladies and gentlemen. Karen said, y'all be careful out here. Gold is gold. Got a position, LULU. Yes, I still have some silver, SLV. And when I purchase gold, it's GLD or IAU. Those are the ones if I'm going to add it to the market. But yeah, gold is gold. It is God's currency, as people like to say, refer to it. I still believe in it, but I'm just questioning. I'm just looking and saying, what's going on with gold right now? Why is gold not doing what it usually does when markets are in uncertain times? And she said she got SDGR. So let's take a look. We're going to take a look at what you call it. GMTV said is NKL. Somebody just brought that up to me the other day. Really bad companies people say it is. I can't speak on that. GTMTV. I haven't looked at the financials of the company. Y'all give me one second. I think it's been doing pretty well as of late. Well, not as a recent, but over time, the last couple of months ago. So we're going to look at this stock. Let's go to Yahoo Finance. I'm going to pull up my screen here momentarily. Let me pull it up. And we're going to look at RAKTV. Okay, here we go here. Where are we? Okay, we see stock futures dropping a little bit, but that's okay. RKT. And the reason why stocks are different because people look at stocks because you can sell them anytime, every day. But you can't do that with a regular, you know, you can't buy and sell houses that fast, right? But you can do that with stocks. That's what makes stocks so volatile because people can log in and see it and say, "Oh man, my stock going down. I need to sell this, or I need to do something with it." I'll give me 1 second. All right, here we go. We got Rocket here. This is the Rocket Company. We're going to look at his profile. I think this is the Rocket Mortgage. Oh, they're in Detroit, Michigan. Okay. The mortgage finance company, Rocket Mortgage, or something like that. Engages with the mortgage business in the United States. It's involved the original process of underwriting and servicing prominent government sponsored enterprises, comfort mortgage loans, as well as Fair Housing Act, FHA, U.S. Department of Agriculture, Veterans Affairs, VA loans. So they do VA loans, they do FHA loans. The company offers its mortgage loans in 50 states through the internet, national television, and other marketing channels. It offers title insurance, property valuation. So you're looking at it's probably like a mortgage company. Okay, cool. All right, you got a regular mortgage company. And let's go over here to let's take a look at their finances. Let's go to the cash flow statement. Okay. Okay, expand all. Okay. Has a nice little net income. So let's see. All right. So at least netting a profit. So total revenue here, it's in thousands. So that's 3 billion. Okay. 3 billion, 3 billion, 4 billion. So total revenue top line is okay. It's growing a little bit, nothing too crazy. Net income is kind of growing. I like to see companies that is piling up with total revenue. That's getting so much revenue. I want the revenue to continue to go up because we're not buying a stock of what it done in the past. I want to see you have some momentum with your revenue because that's more than anything. And more importantly, revenue, how much are you keeping once you take it home, right? So it is netting some of the money. Okay. So last year it kept 893. So now let's look at the balance sheet. All right. So I only got this year and last year. Okay. Total assets 11 million. Ooh. Okay. I like the big asset grow. 11 billion. Liabilities, total liabilities 8 billion. Okay. Shareholders equity, so its net worth is 2 billion. Okay, not bad. Not bad financially. Let's see something here. Not bad, not bad. You know, it has a positive I may look into it some more. Now, when I see this, ladies and gentlemen, it is a profitable company. Rocket, as we can see, it's a profitable company. Decent balance sheets, right? Pretty good balance sheets. Not bad. A profitable company. It's only 29 bucks. Now, my only other not companion, I don't think I got to look into competition. Who else does what Rocket Mortgages does? And what does their books look like? Are their books better or worse? Is this the industry standard? Is everybody profitable because their overhead is low? I want to see who else is doing it. Who's the largest person in the Rocket Mortgage in the home mortgage loans, right? I don't know who it is. Maybe it's Countrywide. I don't know who it may be. You do a little research. I can find out who that is, and then I will compare that to Rocket, and then I will see. Okay, then I can really see the value. How are you doing compared to your peers in the same exact space? Now, if I can compare it to its peers and see that, wow, this company is everybody. This is the only company that's making a net income. There's the only one that's making a positive, having a positive growth in cash flow. Then I would probably invest in the Rocket if it made sense for me in my portfolio. All right. All right. Somebody asked, you know what? Denise Hunter said, hi, what do you think about DPHC? That might be on my. Let me see here. This might be the same one that I saw. I might already have this on my watch list. Let me take a look here. Somebody brought that up to me. I think that's it. Give me 1 second. Let me pull it up. Let's see if that's it. Yes, I have been following. Yeah, it went up 12% today. It's $19. I have to look. From what I know off the top of my head, I remember looking into this company. It's a blank check company, and I think that it's supposed to be buying some electronic cars or something like that. But I don't understand the blank check piece where it's like, oh, this company is going to go public, then it's going to come on a DPAC, but it won't be DPAC. That was one of the things that was kind of mixing me up about DPAC. I remember looking into that company, but I'm keeping an eye on it. I like it, but that was one of the things that was bothering me about it. I said, well, I don't understand this all the way with what they're doing. So they're a blank check company, and it's like this electronic car is supposed to be coming over there. I think it's a Chinese company or something like that. No, I think they're made out of Texas, if I'm not mistaken. Don't quote me on that. But when they do that, this company is supposed to run up, and then this blank check company is supposed to go away. But I'm like, are they going to stay up on the DPAC? Or are they going to get their own new ticker? What's going on? I don't know about that. So I'm not very familiar with that. She said, yes, that's me on IG. What do you mean that's you on IG? So that's my hope. You know, that wasn't too helpful, but hopefully that helped. But anyway, ladies and gentlemen, that's going to conclude today's episode. We're going to do a quick recap. We talked about the bull versus the bear. We pretty much broke down that the bull is the house and the bear is you have to have your timing right, and it's more speculative than the bull. The long bull is usually the house. That's the side that's going to win in the long run. It may take some time, but they're going to win in the long run versus the bear. Yes, he's going to have some good times, but to be able to win consistently is very hard on the bear side. We talked about the rebound stock versus the high risk stock. The rebound stock is that great company that just had a recent pullback of 5, 6, 7%. That's bringing an opportunity for investors versus that little company like an NIO, that high return, but it's unprofitable. It's overseas. You don't know if it can make it. So you jump into it. We spoke about the difference between investing into which ones and how to pick one and all of the good stuff like that. We also went back over Economics 101, the market cycles, knowing the cycles of the market, knowing so you won't get that fear out of you. Don't get me wrong, ladies and gentlemen, when I log into that account and I see that red all over the place, it brings fear into me, but I have to remember this is market cycles, right? The fourth thing is what is going on with gold? Why is gold tracking the indexes? Why is gold following stocks? They use it the opposite way around. Usually gold works on the inverse. And then, we had a great conversation in the comment box as well with you guys and girls. And then we looked into rocket loans, rocket mortgage. We did a quick little look into them, whatnot, not too deep in analysis because that got thrown on me last minute. So I did a quick look into rocket mortgages. Didn't look bad at all. But I can't say that because I don't know the sector. I don't know what other people are doing in the sector because I can find somebody that may have better finances than rocket mortgages. So, ladies and gentlemen, I thank you guys and girls for tuning in. And to the next video, podcast, cartoon, or whatever else crazy you see me do around the globe. Peace, be safe. I'm out. Thank you.